Welcome, everybody. As we just wait a couple of minutes for everybody to file in, we're going to get going very, very soon. Please say hello in the chat. Let us know where you are dialing in from. We love to know what part of the country and what part of the world you are all from. Seems like good numbers, which is great. Welcome, everybody. Great to see some familiar names and some new names. Igrani's here. We did an webinar with Igrani last Friday, so great to have you back in the audience. Kirsten from New South Wales, this is good. Feel free to let us know where you're from. We'll just give it a few more minutes, and then we will kick off with Lauren. Ah, there's Lauren from South Australia, Rainbow Beach, Queensland. Love that part of the world. Sunshine Coast. Bit warmer than Melbourne. How's Adelaide, Lauren, today?
Sunny today. It's cold but sunny, so it's
Awesome.
nice.
Awesome.
We'll try and get outside at some point.
Absolutely, bit of fresh air. Well, let's kick off whilst everybody's still filing in. So, welcome to today's webinar, which is the tax time red flags and traps with our resident accounting and tax expert for creatives, Lauren Thiel. Lauren is a long-time collaborator of Rounded. Well, obviously, I'm Olly. I'm one of the co-founders of Rounded. Lauren, as I said, is one of our long-time collaborators. For those of you that are subscribers to our newsletter, you'll know that we share monthly tips that Lauren provides. Lauren is also the founder of a fantastic accounting practice based in South Australia called The Real Teal, and she specializes in being an accountant for creatives. And if any of you have done anything in and around the Adelaide Fringe Festival or know anything about the native performers from South Australia, you'll know that Lauren has a fairly high profile in that performing marketplace and creative marketplace. And you may be able to tell just by her general demeanor and sparkly background that she loves to be the center of attention. Now, today we are going to be looking at, all things tax. There's a number of things that we're going to be discussing around the ATO's approach to tax time this year. We're going to be looking at common mistakes. We're going to be looking at things like mixed use items and things that you might use personally and for business as well. We're going to look at some record keeping tips and how you can make sure that your records present nicely and will always be ready for any scrutiny by the ATO, and a few tips and tricks that you can do before June 30 to make sure that you are in good shape. There will be time for Q&A at the end, so please do feel free throughout the webinar to put your questions in the chat. Sarah, who looks after all-rounded content, will be monitoring the feed, and she will also, make sure that she can relay your questions. Now, before we start, before I hand over to Lauren, I just need to make it very clear that any advice that Lauren gives today is general in nature. It does not take into account any of your personal circumstances. Lauren will not answer specific questions about what you can claim in your business as an expense or what you can't. And she will encourage you to go and talk to the ATO or your own accountant, or to book an appointment to speak to Lauren more directly. But we'll do as much as we can to be, as useful over the next sort of 35 minutes. So enough from me. Welcome, Lauren. Thank you again for joining us.
Thank you. Thank you for having me, and thanks everybody for coming along. It's always encouraging to see people at least pretending to be interested in tax and accounting. Even if you're all paid actors, I appreciate it nonetheless. Uh,
Hopefully not. Hopefully these are all
No,
real
look, I think
people.
it's a great investment, these sorts of things in your education as, small business owners, because the reality is, my business exists because they don't teach us this stuff at school. So what we're going to go through today, I guess, Ollie's already summarized. So the first thing I want to start with is what the ATO are focusing on this year. It's kind of like when you're driving down the road. I don't know if you've seen this, and you're like, we know there's all these road rules and we need to follow them all, but there'll be those signs that are like, police are targeting seatbelts. Like, well, obviously, but for some reason in that area, that's what they want to target. So think about it like that. All of the usual road rules or tax rules still exist. They don't just forget about those. But they do have particular areas or industries that they might be paying closer attention to. And it's not a reason for you to freak out and go, oh my gosh, I'm in hospitality, they're going to audit me. It's more just to go like, let's really cross our T's, dot our I's, make sure that we've got everything in order, do our best, ask for help, those sorts of things. So one thing I will flag is that, we've seen the rise of AI, the ATO in the background do all sorts of chats with different companies, software companies, etc., banks, and have deals that they don't tell us all about. We just know that they sort of, exist. An example of this is Airbnb or like your bank statements. So this will sound really obvious, but if you are earning interest in your bank, the ATO already know about that. So don't take it out of your tax return and think you're going to get away with that. If you're running an Airbnb, one room in your house or, your whole house is on Airbnb or something like that, please don't think that you can just not report that income. They already know about it. That's an immediate red flag. They'll be like, we're pretty sure you earned this. How come it says zero? Or how come it says half of that or whatever? So if there's a reason you're not including that, that's not fraud, then make sure you've got that prepared because it probably will trigger an order or at least a question from the ATO. So think about what kinds of digital sources of information that they may already have and make sure that you're also not missing those. Your shares that you may have, interest in your bank account, rental income, anything that's that type of stuff, they're already going to know about it. On the other side, what happens in your small business, they may not know about necessarily, which is why in your tax return, what you're doing is you're telling them what's happened. You're reporting on the income earned, and then you're saying, please don't tax me on all of that because I actually also spent all this stuff, and I think you should not tax me so much. Look at these expenses. Here's my profit, tax me on that bit. Okay. Um, I think in terms of like other things that they've said that they're looking at in particular this year are underreporting your income. So obviously they don't like any of the cash industries or businesses or like because they don't know about it. So just being really wary that just because you may have received a payment in cash doesn't mean you don't have to declare that income. If you have earned money and it is taxable income, you need to report it in your tax return, even if you didn't bank it necessarily. So they do try to create all these sort of, I don't want to say traps, but kind of like protections against that. Like, for example, if you run a cleaning business, you probably need to do a special report about what you have paid to your contractors, and they start to do cross checks, right? So there's a lot of checks in place for that kind of thing. So make sure you just, I mean, it's not too hard, but just include the income you've earned and you should be okay. The other one is doing capital gains calculations incorrectly or like not applying the small business concessions correctly. Now, if you're not familiar with capital gains, it is a pretty tricky area. There are a lot of little, if this, then that, but only in this situation and only before that year and types of rules around it. So I'm actually not going to get into that one today, but I just recommend if you have assets that you have sold, for example, shares or a property or a big piece of equipment or something like that, you may have a capital gains or capital gain that needs to be taxed. It's
So,
done.
so Lauren, just as a
Yeah.
definition of capital gain. So it's basically a capital gain is where you buy something and then you sell it for more than you bought it, and it's the margin of that's the profit that you make, and that's where capital gains tax is centered. Is that there's a
Yeah.
reasonable
Yeah. That's a
explanation?
good
Yeah,
definition.
yeah.
Accounting has all these very tricky and specific uh, definitions. So I would recommend that if you have any question about that, you're like, that sounds like maybe I have that, go and speak to an accountant. because to me, it's important you get that calculation right. Otherwise, you may be overpaying tax or underpaying tax. So they're looking at it. Make sure you chat to someone about that one.
Okay, if we just focus on expenses for a little, around
Yeah.
about this time of year, and maybe this is just sort of, the ATO being sneaky and kind of preparing everybody for it. There's all
Hmm.
these articles in the mainstream media about this year the ATO is coming down hard and it's
Mm.
not going to fall for any of your tricks and it's going to
Hmm.
audit absolutely everybody. So if you claim for, that cup of coffee that you shouldn't have, we'll find out and the ATO. So in reality, when the ATO says, look, they're cracking down on small business, as was the narrative this year.
Hmm.
So we've
Hmm.
got a lot of rounded customers and a lot of small
Yeah.
business owners sort of perhaps a little bit more anxious than normal.
Hmm.
What does that actually mean for the small business owner in terms of what they need to do practically?
I think from a practical perspective is knowing that what is in your tax return, you can back up. I think that's probably the simplest way to put it. So number one is not underreporting your income. That's a big no-no. That literally tax fraud. Don't do that. But on the expenses side is, I think if you're not sure, ask an accountant. Like, is this deductible? We've got a blog on our website which is called Common Deductions, so that might help as a first place to start, both as like an inspiration. Oh, I probably can claim that. I didn't realize. And also as a cross check to go like, oh, damn, I need child support. Sorry, I need childcare to be able to go to my job, but no, that's specifically not allowed, because there are expenses like that. So in that sense, I think it's like double checking is or isn't this allowed. But in terms of um, covering your ass is more around having your receipts. Definitely, like make sure you have something to substantiate or some evidence that you actually did spend the money. Because again, a fraud thing would be claiming for something you literally didn't even incur. I think the other big one is making sure that you're not over claiming. So when we talk about some things might be like partly for personal, partly for business. Common one is your phone. So like I might claim 80% of my phone or 60% of my phone or whatever or 20% of my phone, but I don't have two phones, so why would I be claiming 100% of my phone for my business?
How accurate? So how accurate do you have to be with something like a phone? Like, is it just like being honest and going, okay, well, it's probably 50-50 or it's 60-40? Is that kind of just sort of arbitrary gut feel type of finger in the air?
Depends on the
Enough?
expense.
Like
So
for a phone specifically, because that's something that would be common to most people with their business.
I believe that the ATO's guidance is that you have a log of your usage of your phone, and that is what you use to justify the percentage. So it's not quite a gut feeling. I think back in the day that was a lot easier because you could kind of go through, you were paying kind of for the minutes, and you'd go through and you'd highlight and go, oh, well, that was my client, mum, don't claim for calling mum, etc. These days, one tip I would give is like in your phone, it's a scary area, but there's a digital well-being section and it will show you which apps you use for what percentage of time. So you could use that as a base and sort of go like, well, my emails are, 90% for work. Obviously Tinder, not so much. So if you use that as a guide to then go, right, my phone bill is this much. X percent for my, work usage equals the deduction. And I think this is also a really good point is like the ATO can ask you about your tax return or audit you for like years in the future. Now, I don't know about you. I mean, I do remember 2020 because it was traumatizing, but do I remember every single deduction that I included and how I came to that calculation? No. So write it down. Make a Google Drive folder and inside of that, like for each financial year, and you'll be like, right, now every number that's in my tax return, phone bill might say $900. And I will then have all the receipts, which add up to maybe, $1,000. And then I have my calculation of 90% and why I thought that 90%, was fair. Other things like car expenses, there are specific rules on how you are to calculate it. So please don't just apply this, reasonableness test to everything. Some things like that, house and car, do have really specific logbook rules and how you are to calculate it.
Cool. Question about receipts, which
Hmm.
is always a popular one. If I buy something with my credit card and I lose the receipt,
Hmm.
is my bank statement enough to substantiate a legitimate business purchase if I'm reconciling bank accounts to my accounting software? Does having that transaction in my list of credit card in my credit card statement, is that enough for the ATO?
I would not rely on that method. So if it was like, oh, one of my expenses or a small expense, I lost the receipt. Like I'm not going to be really upset if my, $8 printing at Officeworks receipt is lost, right? That whatever. It's not even material really. But ATO don't care so much about materiality. They want to know about everything. So if it's paid for with card, it's in your bank account, there is a bank statement that I think of it like a backup. So the issue will be if you've got a substantial deduction, you know, you buy a business car and you have no receipt for it, like they're probably going to have questions or doubt that. And I think the other thing to think about is like how easy it is to make a payment to, a friend. They've changed their bank account name or, like it's a bit too easy if you don't have anything else to back it up. And also, if we use Officeworks as an example, let's say I spend $50 at Officeworks and I claim $50 in my business. Who's to say that I just didn't go to Officeworks and buy $50 worth of lollies for me to eat, that front little counter, or to get all my family photos printed, or without the receipt, it tells you where you spent the money in your bank. It doesn't tell you on what. So that's why you need the receipt is to be like, yes, it's not about that place is deductible. It's about that expense is incurred in relation to earning my income. It is a business expense. It's allowable based on the tax law. So I kind of say it's good as a backup. Definitely don't rely on it. Think about it like if your house burns down, they'll probably be a bit forgiving and let you rely on third party bank. It's better than no like support, but it's not technically enough. No.
Okay. And then my second question is if I have gone to Officeworks and I have been diligent enough to take a photo of a receipt or to
Love it.
upload it to my accounting software or my drive, whatever it may be, however I'm
Hmm.
keeping my records,
Hmm.
will the ATO accept the digital copy or do I have to
Yeah.
keep the paper copy as well?
Yes. And look, you don't actually upload it to the ATO. It's there for you, well, and for them to be audit ready, essentially. I encourage all of my clients who some of them kick and scream about the fact that, there's so much work to get your tax done. And, part of me is like, I hear you, it does suck. The other part, honestly, is like, you're running a business. What do you expect? It is a lot of work. Yes, it is so much work. Welcome to business. But wait, now I'm singing and I've lost my train of thought. So
It is hard work. Yeah, keeping your accounts in order.
keep your accounts in order. I do think it is worth you thinking about it. Like, I want to be able to sleep at night. So when I lodge my tax return, I'm ready for an audit. Not, I'm going to lodge my tax return and fingers crossed I never get audited because I have nothing to back up what's in my return. I've just kind of winged it. Like, I want to know every single number. Like I said, if it says 2 grand, I've got receipts exactly for 2 grand, or I have a calculation of how I arrived at 2 grand. And every single number in there, I can back up. That's how I approach it. And back the other way, if you were to go from my bank statements to my tax return, you can see every, wage income or cash deposit or whatever is included in there. So it's about this two-way reflection. And I think I get to sleep at night because I'm like, yeah, an audit is scary and a lot of work, But I'm not really that scared because all the work is done in advance. I just share the Google Drive folder. I'd be like, download my information out of Rounded, for example, and off we go. Like, we're done. There you go. Have a look. And reality is they might disagree on, a one thing, maybe, but I'm not going to lose sleep over that. They might be like, oh, we think you should have claimed 40%, not 60%. I'd be like, okay, cool, whatever. But it's not like I'm not going to be massively in trouble for that. I might have a little extra I had to pay in tax or a little interest or, something like that, but it's not a huge problem because I'm doing the right thing, complying by the law, have the evidence to back it all up.
So from the ATO's perspective, they've obviously got millions and millions of tax returns, right?
Hmm.
What are the red flags that they look for that might say, okay, well, we might just have to dig a little bit deeper. And I'm sure a lot of it's automated these days, and
Yeah.
it's all sort of passed over by the ATO software. But what are the red flags? And so that I guess the other side of looking at that are, what are the things that you can do from a record keeping perspective that are
Okay.
going to sort of keep you more than likely under the radar or not falling foul or triggering your tax return with the A.
Yeah. So some of them will be, so first if we say like what things are they looking for, there are, so the ATO, as far as we know, because I don't imagine they tell us all of their secrets and all of their ways, otherwise everybody will just be trying to navigate that. Um, from what we know, they obviously have these big data sources that come in, right? Like we've talked about, Bang, Airbnb, blah, blah, blah. So that info comes in. So if your tax return includes those things, immediately they're going to be matching them up. If they don't match, red flag, done. There's also, I imagine, some kind of big data analytics that happens where they're not looking on an individual level first up and being like, oh, what's Lauren Thiel doing? What they're doing is they're going, right, everybody, we're targeting hospitality, everybody in hospitality. Now they're not going to audit every single person, but they might focus on an area or they might go on an individual basis. They'll have triggers that are things like, if your income went from 30 grand one year to 80 grand, or it went from 80 grand to 30 grand, or if there are dramatic changes in anything in your return, probably going to be a red flag. If you're claiming something that is really like a big deduction that you didn't claim last year or that is weird for your industry, that could create a red flag. It's not saying don't do those things. Like, don't be concerned about the fact you might trigger a red flag. Just be mindful that, like, if it looks weird, they're probably going to ask about it, and that makes sense. Like, I had a client who bought a 40 grand piano. Like you don't do that often. So like this one particular year, they've got a loss in their business and this huge deduction for like business equipment, essentially. And the ATO are like, what's this? Why have they got such a big? And so we just explain, we're like, here's a receipt, it's a piano done, like, depreciate X, Y, Z. So there's things like that that will happen. The best thing you can do is I think the individual red flags that you can try to not have pop up are things like making sure you lodge on time and making sure you pay on time. Those are the two biggest ones. As soon as you are sort of known to the ATO to be a late lodger and to be late to make payments, or to not register for GST when you're meant to be registered for GST, because that can look like dodging tax, those things will definitely, like, you're immediately on their kind of red flag list. So don't be scared. Just start the process, communicate with the ATO, communicate with an accountant, get that ball rolling. Burying your head in the sand does not make the problem go away. So as hard as it can be, you're better to just make a start, get them lodged, get back on track, and that red flag goes away.
Yep. Awesome. So guys, I know that there's a few people that have joined us since we started. Just to let you know that we will be taking questions. I can see a couple in the feed. So if you do have any non-tax return specific questions for Lauren generically about filing your taxes, then please do put them in the chat, and we will make sure that we get to them before the end. One other thing around expenses that often comes up, Lauren,
Mm.
is the instant asset tax write-off. I wonder
Hmm.
if you could just explain. A lot of people don't know what that is, especially for larger ticket items and how
Hmm.
it works. Just wondered if you could give us an overview of what that is, how it works, and how it can benefit you running your business.
Yeah, absolutely. So when we look at assets, and I will say I have a blog that will take you through this thoroughly as well on fixed assets and on like things like buying a car and on depreciation. So if what I'm saying you're like, cool, kind of get it, but I want to really, read that, we have that. So with things that are like bigger assets, let's say a laptop is generally a good example. If you're buying, a computer for work, or a piece of equipment or a big desk, I don't know. Those sorts of things, you're going to get benefit out of them for more than just 1 year, usually. So we consider those to be an asset. They're not just an expense. And you might have heard, like in the past, this was pre 2018, I think, was when they first introduced this instant asset write-off rule. Prior to that, you basically had to have a useful life for your asset, let's say 3 years for a laptop, as a made up example, and you would only get a deduction, but it would be spread over the useful life of the asset. So if it was $3,000, you get $1,000 this year. Even though you spent three, you get 1,000 this year, 1,000 next year, 1,000 the following year. But what happened with the small business instant asset write-off rule was they said, well, actually, if that expense is under a certain amount of money, and that has changed across multiple years, but let's say it's 20 grand, you can just claim it in the year you bought it. Essentially, what they're saying is bring all of that depreciation into 1 year, depreciate 100% in this year. So if I bought a laptop this year and it's under that 20K, boom, deduct. During COVID times, they bumped that up to like, I think it was 150 grand at one point, which is like more than most of my clients make. So I was like, please don't go and buy $150,000 anything. But depending on your business, that could be very beneficial. For some people, didn't make a difference. But I want to keep in mind that that rule, the actual tax law, is about depreciating the asset. We have a special rule on top of it, which is the small business instant asset write-off. That is likely to go away at some point, and we will be back to the depreciation method for those assets. Okay, so that's why you'll hear accountants sort of saying, like, make sure you're buying these things before 30 June to get that small business instant asset write-off. And then you can claim that full deduction. And obviously, if you get a deduction now for $3,000 instead of 1,000, that's better for you now. Nobody knows the future, so we
So
can't
as
say
as
it's
of
perfectly
as of
fine.
right now, though, there is an instant asset write-off up to a value of $20,000, I
Yes,
think. Is that correct?
yes,
And
it
I
is.
do believe, am I right in saying that it has been extended for next financial year too?
Yes, there
Yes.
was much discussion in the
Yeah.
last few months about whether that would happen. To my knowledge, right now, at this time, it is expected to extend. But like I said, the actual tax law is the baseline. So we're thankful for the extra little special benefit that they're giving us at the moment. Again.
So, of course, what that means is, and of course, talk to your accountant. This is not
Hmm.
specific financial advice, but if you know right now that in the next month or two you are going to have to make a purchase of a camera or a laptop or
Yep,
something, if you do that before June 30, you will be able to include that purchase in your tax return, assuming that you meet all the criteria under
yep.
the instant asset write-off laws. And so that will be something that could potentially reduce your tax liability by making that purchase before June 30.
Exactly. Instead of buying it on 1 July, buy it by 30 June. It's that kind of discussion, right?
Yeah.
Yeah.
And there are actually a lot of places that are aware of this. So I think, again, sort of the JB Hi-Fis of the world, and certainly I know the car dealerships, it's a little bit more expensive, but there are lots of people right now that are doing June 30 deals and end of financial year deals. So now can be
I may I add, please know that most car salespeople are not tax accountants. So they are salespeople. And if you are, in fact, you just should be unsure about the tax advice they give you. It is not true that just because you have an ABN, you can claim for buying a car. We have a blog on it. Check it. Talk to an accountant. Do not go and buy a car before 30 June just because the salesperson told you to.
Absolutely, totally, and great advice. Thanks, Lauren. Now, I'm conscious that we're coming up to
Sure.
past the hour, so we will probably want to wrap up and go to questions soon. So, everybody that has asked questions in the chat, we will absolutely get to you.
Mhm.
So, Lauren, I guess what I want to ask you is, what does good record keeping look like? Because even if
Mhm.
you've got accounting software and everything else, you you're not doing yourself any justice by waiting until the end of the quarter or waiting until the end of the financial year and then going, right, I've got to do all of this at once. So
Mhm.
give us a sort of a vision of how, people should be looking at their record keeping in a way that's going to they're going to get the payoff. At the end of the financial year or the end of the quarter when they need to submit a BAS or an income tax return.
Yeah. The to me, good record keeping is like having a system in place for yourself and then consistently following that. Um, Ideally, you are doing it throughout the year, like anybody doing it just once a year, and I know that's really common. Of course, it's a nightmare. You're doing a year's worth of work in like under pressure. No one is going to enjoy that. And also, you are more likely to make mistakes or miss opportunities. Whereas if you are doing it every single week or at least every month, it will be better, probably better for you mentally and also in terms of your deductions, so your tax position. Software in place, obviously we love Rounded. If that suits you, if you're a sole trader,
The
small
software is
business,
available.
perfect. Yeah, there are others. We can always help advise if anybody is unsure about what would be the best thing for them. But otherwise, a simple spreadsheet. I do think Rounded is a much better alternative than using a spreadsheet. So if that's kind of your option, and I'm not paid to do this, I just genuinely think that. Um, for me, the reason is because it's going to collect all of your bank information as the softwares do, and then you're basically telling it what those different things are. So there's less chance of you missing something, which I like. And also, if you're having a bad week, you're in a little bit of a lag, doom place or whatever, it's already collecting the info. Do it next week. That's fine. I think also making sure that you're taking photos of your receipts as you go. If you could see my desk, I've literally got receipts right here, ready to capture my photos, and then I can throw them out. We're done. I don't need them anymore. They're already saved. They're in the Google Drive folder. Done. And then I think at the end of the year is doing that quick cross check, right? So it's going back in the bank, especially if you haven't used software and you're like looking at those transactions, you're looking at your receipts and you're making sure everything is included. And yeah, again, keeping those logbooks throughout the year. If you're trying to claim for car expenses, it's really hard to backdate that. Do it that week or get the apps to support you, like Driver's Note app. Um, yeah, I think the biggest thing is having a system. Make sure, like, pop those things in your diary. Have a little money date with yourself, pour a glass of wine or a cup of tea, do the jobs that you don't like to do. You can build in reward systems as well and be like, if I have taken all my photos or put my money away for tax or whatever, I get a boost juice or I get a new squishmallow or like whatever your thing is. Um, Try to not make those rewards cost more than the money that you're saving, but yeah, I think that's probably good. Making sure also a really helpful one that's not really related to tax, but you've sent off all these invoices. Have people actually paid you? Are you double paying subscriptions? Like a benefit of having good records is you can check those things.
Yeah, awesome. Now, this isn't a question that's on the list, but I thought I'm going to throw it out there anyway because again, it's a big thing, especially for sole traders.
Mhm.
Certainly, if they're new to working for themselves.
Mhm.
Not everybody on the call, not everybody who watches the recording of this may have an accountant, or they may have an
Mhm.
accountant that they're not quite sure about, or
Hmm.
You're obviously position yourself as an accountant for creative sole traders,
Hmm.
specifically, as well as other things we know. But if you're sort of asking yourself, am I really getting the right advice? Am I getting the value for money? Or I need to find an accountant. I don't know where to start. What should I be looking for as a sole trader? What are some of the things that you could suggest to help people sort of understand, because they may not need PwC or Collins Street accountant.
Yeah.
But they don't need all of that stuff. Sole trader accounting is quite simple at its
Hmm.
basic level. So what are some of the questions that people can kind of ask of themselves or ask, perhaps a potential accountant around whether or not they're going to be suitable for me as a sole trader?
Absolutely. I think a big thing is honestly vibes. So, accountants, if you are a chartered accountant or a tax agent, we all pass the same test, right? So, we can all do all the accounting that needs to be done. There is something to be said about experience. For example, I would not throw myself into R&D tax anymore because it's just not a thing I've practiced for like 10 years. I'm not going to do that. So if you're looking for R&D tax, don't come to me, right? So you might have a specialist need. If you are a sole trader, small business, look for an accountant who says they work with small businesses and sole traders. Number one, because they're going to know what your needs are. We have done sort of a sub niche and gone creatives or creatively minded, which I'm learning is also kind of anyone who's neurodivergent. We've have accidentally ended up in this camp, which is great, love it. So I think finding that if you have a niche, excellent. You might a lot of people will also find if they're doing a lot of like online sales, there will be an accountant who does that really, really well. There's, people who focus on tradespeople, etc. So I'm a big fan of specialist, but small business. Then I think you're also having a discussion with them, book in, have a call, suss their website, and see if the vibe is right for you. You want somebody that you feel comfortable with, that you can talk to, who's approachable. And then I think your next step is like, what is it like to work with that accountant? Because we all take a different approach, especially if we're running our own businesses. For me, it's very tech heavy. I'm like, and also I do push a lot back on you to go, it's your business. You need to run your business. You need to keep good records. I'm going to help you do that. I'm going to provide the templates and the encouragement, but I'm not the kind of accountant where you come to me with a giant box of stuff and I go through it. That I'm here to educate and motivate my clients and help them be better business people. So I'm not going to be the right fit for everybody, especially if you don't know how to use Google Drive. Probably I'm not going to be the fit for you. So there's things like that, right? Other people will go, oh, I really need to see my accountant face to face. Fab, that's really good to know. So think about what you like, what's going to work really well for you, what you're open to, who's the right vibe, what do they offer, then check the price. Because you also need to be able to afford the service that you are looking for. I'm more than happy to hold your hand, but it is going to cost you way more, you know?
Yeah, that's great. Great advice. So why don't we go to a couple of the questions now, guys? So if
Mhm.
there's anybody's got any questions for Lauren, please put them in now and we'll run through them. So we have the first question from Lakshini, who
Mhm.
asks, how should I be reconciling credit interest from my business savings? So I think we can answer that generally, right? Generally, interest that you have from money that is in a savings account. How do you reconcile that?
If you're a sole
Um,
trader, I would make sure that your bank has your TFN and then the bank will report it directly into your MyGov and it should come through as pre-fill for you. And that way it'll land in exactly the right spot. If you're not set up in that way, then you'll get a statement from your bank, which is like your interest statement. Usually, I think they pay you in like May or June, and then you just look at how much you earned in interest and plug that into your tax return. That's your interest income, with a giant asterisk at the end that it depends, banks, foreign income, blah blah blah.
because there's interest and then there's bank fees, and so there's a bit of
Yeah,
balancing out to be done, isn't there?
correct.
So essentially, anything that you earn from your bank account is income. Obviously, anything that's directly charged by your bank that's relevant to your business is an expense,
Hmm.
and so there will be some balancing out. But as Lauren said, if you give the ATO your TFN, that basically allows the ATO to see all of that, and they'll do all of the hard work for you and input that into your pre-filled portion of your tax return. Is that about right?
Yeah.
Yep, awesome. Okay. So Karina asks specifically, um, can sole traders also benefit from the instant asset write-off?
Yes, absolutely. 100%. Um, you need to have made less than $10 million, I think.
Just the 10?
Yeah,
Yeah.
yeah, yeah. I forget sometimes that there are small businesses that make more than that. But yeah, if you, most of the time, my clients anyway have fit within that. So yeah, definitely chat to your accountant or even just have a good read. The ATO's website is pretty helpful. And you can kind of sort of Google within there or search, I guess is the verb, for like instant asset write-off or small business instant asset write-off, and it will come up with that. So then you can kind of cross-check your own eligibility and what assets you might consider including.
So I think though you do, I mean, obviously you need to have an ABN at a minimum, don't you, to be
Yeah,
able,
you need to be a small business.
yeah.
You can't
You
just be
can't
running a
claim
hobby
it
and then claim for
personally.
giant
Yeah.
equipment. No.
Yeah.
Mm.
Awesome. Okay. Now, Alana's asked a bit more of an in-depth question, and I think this is probably verging, Alana. I'll apologize in advance on sort of being a bit specific to answer on this call. But generally, can you talk a little bit, Lauren, around if you work from home?
Mm-hmm.
Like what can you claim around sort of bills and
Mm-hmm.
using part of your house for an office and all of that kind of stuff? How does that impact a
Mm-hmm.
tax return? Hopefully, Alan, this kind of gives you a general feel of where you should be looking.
Mm-hmm.
And obviously, if you can talk to your accountant or even Lauren more specifically, I'm sure she can get into more detail. But just generally,
Yeah.
what's the approach with working from home?
There are really specific rules about home office. So there's, I think, two big ways to think about it. There's working from home, which is more like you might it's like a nominal deduction based on how many hours you work at home, almost like a car logbook. So you go like, I worked at home for X many hours. You have a little diary. And I worked at home for 5 hours, then for 10 hours, then 40 hours, then 30. Add them all up for the year. ATO give you a rate. You multiply the two together equals your deduction. You then do not claim for any of the actual expenses. That is your deduction. Boom. They're just like it's sort of a made up number based on the hours you worked at home. That is designed for people who kind of bring their work home with them, right? So they're not running a business at their home, even though it could be related to your sole trader business. It's more about you're using your home in which to do work. So maybe your lights are on for a little bit longer or, something like that. So it's a nominal deduction. The other methods, which is more about when you are running a business from your home, are more specific, generally based on the floor space that you are using up. You do need to have, there's a lot of rules around, is it a place of business? And you would need to go through that with your own business circumstances. Um, a separate space, so you can't usually do that and be like, oh, I sit at this portion of the living room because that's where my chair is next to the dining table. That will not count. There needs to be a whole separate space. But there are different rules when it comes to like utilities and things like that. So it gets a little bit more complicated. Um, it's also going to have an impact on your main residence exemption. So just be really cautious if you are using this method and you own your home, because depending on what you claim and what method you use, it could impact later down the track and mean that, let's say you sell your house, you make money on that, so you've got a gain. If that is your main residence, usually that's exempt from tax. You don't pay tax. However, if you've been saying, well, some of my house is my business, well, then some of your gain might also be taxed where it wouldn't have been otherwise. So just be very conscious, talk to an accountant if you need to with that one.
Yeah, that sounds definitely like one of those that will require a little bit more specific
Yeah. But
digging.
we have two blogs, I think one on home office that might just give you a quick rundown of some of those things as well.
Awesome. Great stuff. All right. Well, look, we're almost at time. So, Lauren, if we have to finish
Yes.
on your three best bits of advice on everything a sole trader should do before June 30.
Oh, okay. Three. And I will cover this in an hour and a half. Ready? So number one is get your books in order now. It's June. You've only got a couple of days. It'll probably take you 2 weeks to tidy everything up. So just start. Just start now. Get yourself a process. Number two is probably book in with your accountant or get an accountant. Now is the time. If you pay your accountant now for the service, it is a deduction in that tax return. So if you pay in June, then the 2025 tax return, which we will start in July, then you can include our fee as a deduction, which is handy. Woohoo! The other ones that you don't want to miss out on are making your donations before 30 June as well. So if you donate money to a DGR status organization, which means deductible gift recipient, that's when they say like donations of over $2 or more, are deductible. You're looking for that. Make sure you keep your receipts, but otherwise get your donations in. It's win-win. You get a deduction, they get money for the cause that you are supporting. And the other one that's really good to look at, but comes with lots of asterisks and rules and things, is making an extra contribution to your super. It can, in some cases, asterisks, become a tax deduction for you. You just need to make sure that you meet the criteria, you're not going over the thresholds, and that you fill in a form to tell your super fund that you're going to do that, and that you do it, I think it's before the 21st of June each year, 21st or 22nd of June each year. So chat to your super fund or to your accountant about that. Again, we've got a blog on it, but otherwise, get all your books in order, get ready, let's launch some tags.
Amazing. I've never been so excited about lodging my tax return as I have now. Thank you
Woohoo!
so much for that, Lauren. That was just an awesome session. I think
You're
we could
very
probably
welcome.
do a whole separate one on super contributions at some
Mm,
point, maybe.
mm-hmm.
That would be exciting
Sure.
too. But guys, thank you for spending the time with us today. We're at time now. We have recorded the session, so we will be sending it out over the next couple of days. We'll also send a link to Lauren's website. So if you would like to talk to Lauren more specifically about your own business, I'm sure she'd be very happy to accommodate you. On behalf of everyone at Rounded, I want to wish you all the best for your end of financial year. Hopefully, for most of you, it's going to be a breeze because you've been up to date with your business admin, and so everything should be fine, and your accountant should be delighted. So, on that note, thank you all, and thanks, Lauren.
No worries.
And good luck, everybody, for end of financial year. We'll see you soon.
Thanks, guys.
Bye.
And they actually get large data sources that they then can match to your return. So